Hello friends and traders, welcome back. In this quick demonstration we are going to review all the forecasts we did in December, and then we did it again a little later. You can watch the videos. Now we wanted to see how they play out, right? This is the reason we do all this. So we can play it when the things happen the way we think they should happen, being predictive, analytical nature of these tools. We must be able to take advantage of all these scenarios which play out. Now this is a chart of years longer term cycles, and we have banks VWAPs. So what are we looking for here is, remember the sticks here, we build these sticks as the measured moves. So let's check it out. So there are two ways, so just to remind you to use them. One is to see the distance when it breaks, and when it comes back how far it went, and then other option is to see the distance vertically from the VWAP line, how far they are off. So there are two approaches to doing it, and then we do our measurements. As you can see, we have these ways to do the vibrational fits. Here there's a green line and this cyan magenta lines going on, the blue lines. So this big fat line is curve fitted, as we have shown you, and we are expecting market to be going at certain levels, and we said these are the minimum targets, and that's breaks, so it'll go here and from here. So we marked all these levels. We also marked this level at 161 extension. Watch the video. If this breaks, it's going there. And we also did quarter points using GANs extremely high and low. Since the beginning of time of the SPX data, we took that and we did a curve fit of 25% of the swings, and we projected where market is going to rally and where the tops are and the bottoms are. So you should watch these two videos so you have a context that we were able to pick this area, we were able to pick this area. This was picked by two means, and we were also looking at if it breaks this, we are going a little bit down here to 45, right? So we marked these levels. Alright, this was where the VIX was extremely high, and you should be a seller or buyer of stocks. Alright, so once we have this probability space, when market gets there, what do? We invest. So now one more thing just to remind you, this is a measured move coming from going back in time, which I'm not going to take you. They already plotted here, you can see. Trace the videos. So from here it broke down. It broke down to this level, and we had marked this level in the line coming out, right? Okay. Now what I'm saying is, if this is happening, when we find this reaction coming back, and banks are always going to be rotating across this line. This is a multi-month VWAP line. Alright, perfect. What do we do? Well, the second option is, when it breaks, we saw this is the measured move. Second option is we duplex the measured move right here. Okay, and then we say, okay, they may be heading in this zone. Alright, and they do. Third option is you trace this line, let this roll. Once the height hits, when the price and this height merge, as you keep rolling, and there we go. See that? This height and this price, they merged at the same spot where we projected this. From this high, we had this line already projected. Now multiple things came together to entice us to make that move, and we did. So did you guys, because you knew this is coming. Alright, so first objective was to get here, but you see there's no stopping, then we know it's going to go to the next level. So if you ended up buying some stocks here, took some pressure, no worries. So did we. In the end, look at X, 369, all the options, we are around 90% accuracy in predicting, right? So when we are buying something here, we know this is this might be happening, and it did. So we always have to buy, keep some extra investment. If you want to invest something, you don't go all in, and if you do, make sure you're hedged. When market is in the panic state, while volatility is very high, you become the market maker yourself. You just become a seller of options. So we were selling the puts here, we are also buying the stocks at the same time, and now we are back in the retest zone. All right, so where are we now? Now we can also look at these major moves, right? How the impulses are working. Impulse is down. So these are, we have to find out the down impulses. We have to find the up impulses. There are 3 impulses we have to measure. I have to go back in time to find, but let's just do it right now. So there's the impulse. Let's double this impulse to the actual move right here. All right, so we just have to keep tracking this, my friends. Okay. So now from these, we are looking at impulses from the break. When it breaks here, where is it going? When it breaks here, where is it going? See that? Impulses. They all told us this impulse down is after they rally across the VWAP on multi-month. When they really stabilized it, they do, right? And they collected all the inventory all the way here, and they take off. Come back to retest it. Now we are holding this, right? So where are they going? Just put it here. This is where they're going. So you can hold multi-month contracts, and we do, and we did. And now we have to rethink the strategy of hedging again, right? So now the VIX is back in action, and we're gonna hedge it again. And this is how we rally. We can do it from here. We can just keep tracing this, right? To keep tracing it when the exhaustion hits. Now this is a very big one. Now they have to really rally big time and to hit this, just like it did here, right? Okay, this one is the ABC tool which we put also. Now this objective is met. We saw on video. It way in advance in video. No gimmicks. Now we can do same reactions. We can put it here, but just to keep it simpler, this is there. Now we have to see the impulses. You can see that this impulses. We just go back in time, 6 months, 1 year, and then see that because volatility shifts with time. So you have to find new impulses. And this is a dynamic approach to doing this. Why? Because as the VIX compresses, these ranges will compress. As the VIX expands, this will expand as well. So they are all, whatever we do is dynamically organized, right? All right. So from here, we were expecting some reaction. We got some reaction, and VWAP, right? Now, if you look at this, it's a yellow line, it's a brown line, and 2 lines. They are like daily VWAP, weekly, and multi-month VWAP on which we have done the averages. So these are the averages of these VWAPs. All right. So we don't do price-based initiation on this. We do a VWAP, which is value rotational for the banks. So this is what we do. All right, my friends. So this is happening. This is happening. This is happening. This is happening. Just keep on rolling, right? Definitely, we are gonna go here, right? But as the things are impulsing. You're not too far away. 300 points, we can just do it. 300 points will take us back to that retest of this, and then break on this here, and it's gonna be rotating and rotating and moving. So there has to be some panic to push it down, but you know the news, what's going on. But we play the measured moves across this VWAPs. Alright friends, I just wanted to keep that. Congratulations on this big huge winning, picking up the bottom and winning this effectively. And we had some shares here. We have the shares, all the recommendations in terms of trying this methodology. What we did, we posted our trades. You can see on X, 369 forecast on X. Alright, just do that once a year. Okay, so we had 2-3 positions we held. We said it's going to be ultra long positions. They were this is where they took 3 positions took hit because again they are ultra long positions. So when you're holding for ultra 2-3 years long, we don't need to worry about a few things. But position is good. We can revisit those at a later time. So this is where we are. Now let's try to do the impulse. Alright, so I have placed my structure here. This is the structure we are saying is we are going to follow, and we see what's going on with the structure is right here, the way we did this way on this way down. So here we are on this structure. We see some structure is behaving. So from this impulse, we are looking at, I think I need to flip it on the other side. 1 second. Okay, sorry about that. Once I moved it here, copied it, I forgot to flip it. Alright, so this impulse from the bottom, first reaction is being measured, and it is hitting this level where we are the blue, and then we're going to hit these levels. Alright, so let's mark them, because otherwise the world comes back and they try to claim. Now this is going to be extremely bullish. Now it may get there. It's 2,000 points up in maybe 3 years. Who knows? If the world gets back to its senses. There it is. So the other levels we are looking at, and just marked here. Look at the ranges on the right side: 6,500 to 7,000 and 8,500 to 9,000. Which basically means we'll double the market. We don't know how much time it will take there, but this is a visible target. If all the $10 trillion realized investments start happening, you can get there. Remember, who knew that you will be there? Who knew? Who knew that you will crash from here? Who knew you will stop here? Well, you did. So you know this too. Now, the question you will be struggling with is how to play this tactically. For that, you can contact us, and we can have some private sessions how to play hedged in. So how do you reach? Is 369 forecast@gmail.com. Very busy. A lot of students are now really making an effort. They are really going for unbelievable things. So you can too if you want it, right? This is a journey which you need to embark on. Make the decision. It's a decision between you and the universe, and the jitters you have regarding the risk management, we can manage it. Regarding your greeds, we can extinguish them. Regarding the confusion, we can create a methodology around it, right? So while the banks do it, we can share with you. The experience, patents, research is you, and your decision is the one which has to make that call. We are here if you are interested, if you need help. Otherwise, you're just missing out on great opportunities over and over and over. Get involved if you are in the markets, if you want to be in the market. All right, my friends, we'll take it from there.